Welcome back to the deep dive. Today, we are attempting quite a feat, really. Tracing the journey of a company that started smelting copper way back like 400 years ago.
Yeah.
And now they're supplying some of the most advanced battery materials for the whole global EV race.
It really is a phenomenal story, and frankly, pretty much a unicorn in the global metals world.
Yeah.
Usually get pure play miners, right? Or just specialized refiners.
Right.
This company, SMM, they do it all. They operate with this rare, complete vertical integration,
Sure.
resources, smelting, and materials,
Uh-huh.
RSM.
RSM, okay.
And underpinning that entire thing is this, 400-year-old Sumitomo business spirit.
Ah, yes, the Sumitomo spirit. And that comes with that famous, almost paradoxical directive, doesn't it? Prioritize credibility over fleeting profits.
Exactly.
Which sounds like the absolute opposite of, well, almost everything driving quick growth today, especially in tech.
It's the ultimate tension point, isn't it? So our mission in this deep dive is to unpack how this deep historical DNA lets them be aggressive. I mean, managing huge multi-billion-dollar projects like Quebrada Blanca 2, but also maintain that super long view needed to, dominate the 21st century resource market, especially when it comes to locking down critical materials.
Okay, let's unpack that core structure then, the RSM model. Forget the acronym for a sec. What we're really talking about is a self-contained value chain, right?
Pretty much.
Why does combining resources, smelting, and materials give them an edge others seem to lack?
Well, the real advantage isn't just the structure itself. It's about capturing margin and, crucially, insulating the supply chain.
Okay.
If you control the whole process, digging the ore, that's resources, refining it, smelting, and then making the specialized end product, materials, you capture value at every single step.
Right. Makes sense.
And this commitment, it goes way back, 1590, starting with copper.
Yeah.
Then the BHE copper mine from 1691. You know, when you've been managing a mine that long.
4 centuries.
Exactly. You learn pretty quick that chasing short-term profit by cutting corners, well, it leads to environmental ruin, and it drastically shortens the mine's life. That Sumitomo spirit forces them to aim for the maximal sustainable use of the resource, and that turns into a 400-year competitive edge.
Yeah, I can see that. I noticed that sense of longevity also seems to shape their management style. They talk about fostering a free and spirited corporate culture, which sounds nice. But they also demand that their leadership have real global competence. I think I read the CEO needs to be able to exchange opinions and jokes with the heads of the big global resource majors.
That confidence is absolutely crucial. Look, operating a business this complex, it means planning for decades, not quarters.
Right.
And their strategic focus confirms this. Major resource projects. They take 5, maybe 10 years just to get from concept to execution.
Wow, yeah.
So they're forced to use what they call backcasting, looking 10, even 15 years out, deciding what the world must have then, and investing today for that future.
Okay, so if they're backcasting, what did they see on the horizon 10, 15 years ago? Because we're seeing the results now, right? This massive physical expansion.
Exactly.
They still have deep roots in Japan, like the Hishikari gold mine, but their growth now seems defined by these huge international bets. Americas, Asia?
Precisely. They're heavily committed to copper, for instance, strategically placed in key spots like Morenci in the U.S., Cerro Verde in Peru, good assets. But the real monster commitment is the Quebrada Blanca 2 Project QB2 down in Chile.
QB2, yeah, that's an undertaking so large it could strain the balance sheet of many competitors, I'd imagine.
Oh, it's massive. They're aiming for full operation by, December 2024. So very soon. And once that copper stream hits steady state, like over 285,000 tons a year,
Wow.
it's projected to put SMM potentially among the world top 10 copper producers.
Top 10 globally, that's huge.
It is. But, lest you think they only build, they also prune. They're active managers. In fiscal 2021, they booked a single one-time gain of roughly 740 billion yen.
740 billion. From what?
Selling their stake in the Sierra Gorda copper mine?
Yeah.
So that shows portfolio agility, right? Building these massive long-term bets like QB2 while still optimizing capital elsewhere.
That is a sharp balancing act. Okay, switching gears a bit to their other growth engines, we saw their Canadian Cote gold development project finally hit commercial production status just recently, August 2024.
Yep, good news for them. Gold is important.
But where this story gets really strategic and where it seems to separate them from almost everyone else is nickel.
Ah, nickel, yes. Nickel is their absolute game changer. And it all comes down to the chemistry, really. This high-pressure acid leach technology, HPAL.
HPAL, right.
They successfully commercialized this ahead of the pack. And the key insight here, the really clever part, is that HPAL lets them efficiently process low-grade nickel oxide ore.
Low grade. So stuff that was previously considered, what, waste rock?
Pretty much.
Yeah.
Or at least very difficult and uneconomical to process with traditional methods.
Huh.
So they didn't just find a better way to mine, they fundamentally expanded the definition of what a viable nickel resource is.
Okay, that is clear.
It secures a long-term supply, kind of independent of the higher-grade, traditional nickel sulfide deposits everyone else chases. They already run the Coral Bay and Taganito HPL facilities in the Philippines.
Right.
And they're planning a third big project, Pomla, in Indonesia. It's all part of their goal to hit 150 kilotons per year of nickel capacity eventually.
150 kilotons.
And crucially, this nickel, it's guaranteed feedstock for their own materials division, that third pillar.
Right, closing the loop. So speaking of that materials decision in RSM, let's pivot hard to the EV revolution. This is where the ore they dug up in Chile and the Philippines actually ends up, isn't it?
Exactly. And they pivoted early on this. You know, we often think of EVs as a recent trend, but their materials business, they've been supplying vehicle-used battery materials since 2001.
2001, what was that for?
The original Toyota Prius hybrid battery.
Ah, okay, makes sense.
So they were way ahead of the curve. Today, they're a major producer of the high-nickel cathode materials, NCA and NMC, that the world's highest performance electric vehicles absolutely demand.
NCA and NMC, the really energy-dense stuff.
That's right.
And the scaling is just incredible. When we talk about meeting global EV demand, what kind of numbers are we looking at for their plans?
Well, the commitment is serious. They plan to significantly ramp up their total cathode material capacity that includes NCA, NMC, and also nickel hydroxide, aiming for 10,000 tons per month.
10,000 tons a month.
Per month by the end of fiscal year 2027. So this isn't just, incremental growth. This is a foundational commitment to be a top-tier supplier right in the core of the EV battery stack.
Wow. And beyond the battery itself, they're also positioning for the whole push towards carbon neutrality, right? Aiming for net zero GHG emissions by 2050.
Correct. Scope 1 and 2.
Which I guess requires growth in completely new high-value materials, too.
Absolutely. That's where the really high-margin advanced materials come in. They're heavily focused on sericelic carbide substrates.
C-Silis, okay. Why is that important?
It's critical for the next generation of high-efficiency power electronics and EVs. Think of silicic as the material that helps make charging faster and ranges longer. Much better performance than traditional silicon.
Got it. Faster charging, longer range, always good.
And they also have these functional materials like something called Solomon. It's a near-infrared absorbing material finding uses in everything from advanced agriculture, think smart greenhouses, to high-performance apparel.
Interesting.
So these are specialized, high-margin growth avenues, kind of outside the core battery metals business, but complementary.
Right. Diversification within the material space. Okay, now let's tackle the geopolitical elephant in the room. Resource nationalism is clearly escalating. We see countries like China implementing export controls on specific metals, critical minerals, even refining tech. How does SMM's business model provide resilience against those kinds of supply chain shocks?
Well, look, their vertical integration, and especially that proprietary HPL technology, act as a pretty strong natural defense. They aren't reliant on external smelters or refiners for their core nickel and cobalt supply from HPAL. That's key.
Internal control.
But the real strategic advantage, I think, comes from the rare materials they can produce as co-products of that HPL process.
Ah, you're talking about scandium, aren't you?
Exactly. Scandium, it's a critical lightweight alloy metal, really useful for advanced manufacturing. And they're an established player here, having planned commercial production way back in 2018, produced directly from the HPAL process output.
So they get it almost as a bonus from the nickel process.
In a way, yes. It positions them very favorably for all the lightweighting trends you see in aerospace and automotive. And crucially, it insulates them somewhat from external resource control policies on specific rare metals like scandium. They make their own.
Okay, that's a smart advantage. And, if the ultimate geopolitical hedge is simply not needing to dig up new resources in the first place, we have to talk about recycling. They seem to have cracked a major technological hurdle here.
This, I think, is the definitive move for long-term source security. They're aiming for 10,000 tons per year capacity in lithium-ion battery recycling.
10,000 tons. That's significant.
It is, but the critical breakthrough is their technology. They claim a world-first successful tech to horizontally recycle high-purity lithium, nickel, cobalt, and even copper directly back into new battery materials.
Horizontally, meaning?
Meaning they maintain the high purity needed. It's a true battery-to-battery system. It's superior because they don't lose those critical purity levels required for modern NCA and NMC cathodes. Older recycling often downcycles materials.
Ah, I see. So it's genuinely circular.
Exactly. It's a closed-loop system. And that severely mitigates geopolitical risk by creating a domestic, high-purity material source, independent of new mining or potentially restricted imports.
That closed-loop system must also be a massive advantage when dealing with, say, major Western car companies, right? They demand rigorous compliance with ethical sourcing standards, LBMA for gold, RMI for battery metals.
Absolutely. It simplifies the compliance headaches significantly.
Yeah.
Having that traceable, recycled, high-purity material stream is gold dust, frankly. The credibility built over 4 centuries translates directly into a verifiable ethical supply chain today.
Okay, let's look at the financials then. How does a company making these multi-decade, multi-billion-dollar strategic bets like QB2, how do they satisfy shareholders who, let's be honest, often want results now?
Yeah, that is the central tension, isn't it? And they address it directly through their capital management approach. They introduced return on capital employed, ROCE, as a key financial metric a couple of years back.
ROC.
This is specifically designed to manage that huge portfolio and demonstrate capital efficiency, even when those massive upfront investments like QB2 might temporarily suppress traditional profit-based returns.
Yeah.
They're essentially telling the market, look, we know this investment is huge, it takes time, but here's how we're measuring its future efficiency and value creation.
Okay, managing expectations with a different metric. But what about investor stability? Commodity prices, as we know, can swing wildly. How do they assure shareholders of a somewhat stable payout through those cycles?
Good question. They recently addressed this head-on with an update to their dividend policy. The primary policy, that stays, a consolidated payout ratio of 35% or more. So it's tied to profitability.
Standard practice.
Right. But they added a crucial stability floor. A minimum dividend based on dividend on equity, or DOE, set at 1.5%.
DOE at 1.5%. So a baseline return regardless.
Exactly. This is the company hedging against the volatility inherent in their business. They're promising a base return even if commodity prices dip significantly in the short term. It bridges that gap between the 400-year strategic horizon and, well, modern quarterly demands from the market.
That seems like the perfect encapsulation of the whole story, really. They're balancing that deep ingrained Sumitomo spirit long-term credibility with the aggressive, necessary modern moves. QB2, the gold investments, scaling up battery materials to 10 kilotons a month.
And underpinning it all with technological superiority in things like HPL and that high-purity recycling.
Yeah.
They've built a business that's uniquely complex, deeply integrated vertically, and incredibly difficult for any competitor, old or new, to just replicate.
Which leaves us with a final thought for you, the listener. Given that these major resource projects, like QB2, take a decade or more to really mature and they require just massive upfront capital, how should a company, and maybe more importantly, how should you as an investor balance that constant pressure for stable, predictable quarterly returns with the absolute necessity of making those giant strategic long-term moves that ultimately define survival and future dominance in this industry?
It's the perpetual challenge of the resources sector, isn't it? Investing for the next generation while trying to justify the spending on this quarter's analyst call. It really makes this story connecting 17th century copper mines to 21st century EV batteries truly unique.
Food for thought indeed. It's all for this deep dive. We'll catch you next time.